Record number of public companies are shoveling crypto onto their balance sheets, ostensibly to diversify their holdings, hedge against inflation, and attract new investors. The unstated reason, of course, is management's desire to boost their stock price. In recent months, just announcing a so-called, quote, crypto treasury strategy has been enough to add premiums to trading prices. The real bonanza, however, is flowing to the picks and shovels merchants of this latest gold rush. Custodians, brokers, asset managers, and investment banks collecting fees on every trade, transfer, and storage deal. Nathan McCauley, co-founder and CEO of San Francisco-based Anchorage Digital, says that over the past 6 months, the trend has reached, quote, fever pitch, and, quote, has gone fully contagious. His crypto bank has already struck deals to oversee Trump Media's $2 billion Bitcoin treasury and a $760 million trove from Nakamoto Holdings, a Bitcoin-focused company that recently announced a SPAC merger with Kindly MD, a tiny, money-losing Salt Lake City-based healthcare operation whose stock languished at under $2 per share before the May press release. Today, Kindly MD's Nakamoto, whose name pays homage to Bitcoin's pseudonymous founder, Satoshi Nakamoto, is listed as NAKA or NAKA on the Nasdaq. As of earlier this week, its shares were selling for $15, giving it a market cap of $114 million. A year ago, a small group of corporate buyers collectively held just over 416,000 Bitcoin. Today, no less than 152 publicly traded companies control over 950,000 coins worth over $110 billion, according to BitcoinTreasuries.net. The undisputed whale in the group is still billionaire Michael Saylor's Strategy, the company that pioneered the corporate crypto playbook, leaning heavily on creative financing from convertible notes to variable rate perpetual preferred stock. Strategy Inc., which started life as a small Tysons Corner, Virginia-based software company known as MicroStrategy, now owns $73 billion worth of Bitcoin, yet has a market cap of $95 billion, a 25% premium to its crypto asset holdings. And Strategy's copycats aren't stopping at Bitcoin. They're buying Ether, Solana, and a whole roster of other digital assets. This year alone, corporations have raised more than $98 billion to do exactly that, according to Palo Alto-based crypto advisory firm Architect Partners, with another $59 billion pledged by 139 companies since June. Latest case in point, World Liberty Financial, a crypto firm majority owned by the Trump family, recently announced a $1.5 billion treasury anchored by its own token, WLFI. That's in addition to Trump Media's $2 billion Bitcoin treasury. For now, the broader impact of the trend is hard to quantify since it is still in its early stages, says Architect Partners' Elliot Chun. But the frenzy has already, quote, generated a lot of fees across the board. Underwriting commissions and other fees from offerings of preferred stock and convertibles are already proving to be a lucrative business for numerous traditional investment banks and broker-dealers, including Morgan Stanley, Barclays Capital, Moelis & Company, and TD Securities. Take, for example, Strategy's recent $722 million offering of 8.5 million shares of preferred stock in March. Morgan Stanley served as an underwriter, along with about a dozen other firms, making an estimated $10 million in fees. Mara Holdings, a Fort Lauderdale firm dedicated to mining cryptocurrencies and now buying and hoarding Bitcoin, issued $950 million of convertible notes in July. Morgan Stanley and others are likely to reap $10 million on that deal. Another beneficiary of the crypto treasury boom are qualified custodians, who safeguard digital assets on behalf of clients. Take veteran BitGo, headquartered in Palo Alto, which crossed $100 billion in assets under custody in the first half of 2025, thanks both to a booming crypto market and the growth of corporate treasuries. For full coverage, check out Julie Goldenberg's piece on Forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.